Friends, Igor Pashkovsky is here, your trusted real estate advisor on the Eastside Seattle metro areas. Today we've got August market update. Believe it or not, summer is almost gone. You got to get out there, do some camping, do some vacationing because September is coming fast. But we'll discuss some numbers, the latest numbers. I'll make it super simple. I don't really complicate these things. I think it's pretty straightforward stuff. So let's just no overdue. Let's dive in. Let's talk about the market in the Eastside and Seattle. And my favorite Bellevue on the Eastside comes first. Let's go. Friends, let's look into the Eastside. Without overdue, number one thing, the inventory. The inventory drives the market. Drives prices, but the market are driven by many different factors outside of our control. Of course, we've got quite some volatility on markets. Stocks been up and down. We're still dealing with Iranian war, higher inflation, possibly higher interest rates. Regardless of what you believe where the market might go, nobody really knows, but there is uncertainty. And uncertainty drives this inventory to go up. So currently on the east side, we're looking at 4 months of inventory. 4 months of inventory is hands down buyer's market. We haven't had that much inventory at 4 months in a really long time, probably over a decade, that's for sure. Last year we were at 2.4 months of inventory, so that's about 38% increase, which is beyond significant. That's a big jump of inventory. As you see that gray line at the bottom, 486, the demand is slowing. Why is the demand slowing? Well, first, summer is typically a slower time of the year. One of the slowest times of the year as people are traveling, vacationing, and having a really good time. But still, 486 is less than 585, which we had last year. So the demand is slowing as interest rates are still expensive, as uncertainty is there, as buyers see that if they wait, they might be getting deals. Regardless of what the buyers are thinking, demand is slower than what it was last year, and there is hands down more inventory. If we look at a median price, $1,575,000, all things considered, we're still being pretty much flat pricing wise over the last 3 years. Actually, that's actually quite remarkable if you think about it. You think that we'd be below 1.575 million at this point, but we aren't. The market just keeps it stable. But what that means is that the summary of these slides, if I just put it to you in plain English, not every house will sell. As simple as that. Buyers have more options. They're gonna choose and laser focus on the properties that are the best, meaning best quality presentation, smells great, music is playing, lights are on, and priced well. That's the real estate that they're gonna get out to see. And then they still might negotiate a bit to buy that home. So if we look at the last month's numbers for July, some of these best homes, they still get sold over asking. I worked myself on at least 4 buyers deals last couple of weeks, and all of these had a few offers that were presented on these properties. So 13% of them sells over asking, 14% in price, and then 34 goes below asking. So if you think about it, market is still moving. It's not a dead market. Very selective, only best home sells. Let's look into Seattle. All right, my friends, let's talk about Seattle and let's wrap this up. So Seattle is doing remarkably well. When the market was moving and was really, really hot, Seattle was lagging behind a little bit in numbers, if you guys remember. But now it's a little bit the opposite. So if we just look at the inventory with all of the townhome developments that they have, then you have resale developments that now these buyers that bought a couple of years, they sell. And then you have all of the other homes that coming up to market, like they're still only at 2.9 months of inventory, which is 2.9 is different than 4. 2.9 is a little bit more balanced market, which means the buyers have options. There is a little bit of room to negotiate, but Seattle market is still pretty robust market. The reason to the slide to prove what I just said, if you look at the numbers of properties and percentages that sold above asking, 31%. That is huge. 31% of homes over the last months in Seattle for residential only. I don't talk about condos in this. Condos is a different world, right? Condos are actually... condo market took a dump, so it's not a great market. It's not a great thing to be listing a condo today. Let me just tell you that. I mean, the numbers on those are pretty horrific. So, but regardless, going back to residential, 31% sold over asking. Compared to the east side, that's a remarkable number. Look at the other one in July, 19% sold at asking. If we add these two together, that's 50% of the market in Seattle sells at a full price and above that. That's great. I mean, so if you are listing the property and it's a great property and listed properly and, as I said, priced very well, there is a 50% of chance selling at asking. And then if you go and you sit on market, I mean, obviously the discounts there that you be given, but still, like, that's a very, very well-balanced market. So we go to the median price. The median is right around $1 million. It's been there for a really long time. You didn't have that super sharp, incline as the east side had since 2020. Let me remind you, in 2020, the median price on the east side was right around, in January of 2020, was right around $800,000. Today it's 1,575, right? So let that sink in a little bit. But Seattle is still, I mean, it's a very, very well-balanced market. So I like Seattle. Let's summarize this whole thing. All right, my friends, let me summarize this. I'll leave you with this. The market isn't dead. The market is very selective. If you are on the east side and you're a buyer and you have 4 months of inventory to choose from, yeah, you're gonna be taking your time to find the one, whatever it means for you. And when you find the one, this is when the negotiations start, right? So if you're the seller, who you're hiring today is a big deal, and it will translate your wallet, right? The money you're gonna make, they will make a big impact on whatever that property gonna sell for. So pricing strategy is the most important thing today. You gotta prep the house. You have to work it. There are more inventory for them to choose from. So we gotta forget, if you were the seller, the market of 2 years ago. This is a new market that we haven't had in a long time. Buyers been waiting for this market for a long time. They get it. They understand what the market is, and they're willing to negotiate. And if they're buying the house today, it better be worth their time, right? What happens next, we'll see. But again, the market is moving. The market is still doing its thing. We'll see what the future looks like with the future of interest rates, right? Inflation and Iranian war, I think, will still have impact in the months to come, to see if we can bring inflation down, to see if the Fed will increase interest rates or not, or keep it stable. I'm not even talking about lowering the interest rates. So we're going to work through whatever is coming next. And the last thing you got to remember, summer is the slowest time of the year, not the busiest time, the slowest. Typically, market bounce back when kids are back in school and folks are back from vacation. So usually we see an uptick of activity in September and October. Moving into holidays, it slows down, but September and October historically been pretty strong months. Let's see what happens. You have questions, you have my number somewhere here. Let us know what you think, where the market is heading, and talk to you later. Bye-bye.